Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Stefan Bosshard, product head fixed income at SIX Digital Exchange. Our subject, the first digital bond listed and traded and held on SDX, but also listed and traded and held by SIX, what it means in its own terms and what it means for the future of digital assets as a whole. Stefan, hello, thanks for joining us.
Thank you, Dominic.
Perhaps I could start at the very beginning and ask you which part of the SIX group is the issuer of this bond?
The issuer is actually SIX Group itself, so it's the treasury of our group, and that's for various financing reasons we have within the group. As you know, SIX Group acquired the Spanish stock exchange last year, and there are various financing reasons. So it was the group itself, the treasury department.
Mm-hmm. I'm sure that the SIX Group Treasury Department was pleased to make use of one of the investments that the group has made. But apart from supporting its own innovative exchange, what benefits did the SIX Group derive as an issuer from tokenizing a bond issue? And I'm asking this because I wonder what other benefits or what benefits other issuers could derive from doing the same thing.
If you look at the issuance and especially how it impacted the issuer, there are not a lot of benefits compared to today's or traditional assets. But then again, there are not any downsides either, the way we structured it. What basically gave the reason or what was the motivation for the issuer and other issuers, which we're talking to at the moment, to consider a digital issuance is the potential of the technology. Not everything is yet there. It will come over the next years, but we, of course, are looking to more efficient issuances, more efficient asset servicing. That's more contract, which will play a big role in the future. We can think of automating the whole prospectus. Ultimately, it's a couple of years down the road, obviously, but the more we can include more and more parts of a prospectus, which is today a heavy physical legal document, into code, into the asset, and therefore making the whole financial market more efficient and therefore lowering funding costs also for issuers in the future.
Mm-hmm. Right. So we're looking to digitize even the documentation of the issue itself.
That's possibility, absolutely, yes.
Now, the bond had a very interesting structure. It's divided, as I said in my opening remarks, into these two parts. You've got one part which is issued, traded, held by SDX Trading and the SIX Digital Exchange, so a separate CSD, and then the other part is held in the SIX, the traditional exchange, if you like, the SIX Swiss Exchange, and in the SIX SIS CSD. What was the reason for breaking the issue into those two parts?
Very good question. Thanks, Dominic. We introduced something new. We introduced digital assets. We introduced a new regulated central securities depository and a new regulated exchange. Regulated means investors are fine with it, generally speaking, but still it is something new and not all the investors will be happy or comfortable with it with the first issuance. And we wanted to give the investors which are not yet ready still the opportunity to invest into a bond issued by SIX. We don't want to exclude them. That's helping the investors. We include traditional and digital investors, but that's also helping the issuer, because through that we are eliminating the placement risk. You still have the whole universe of investors, eligible investors out there, and therefore it doesn't negatively impact the funding costs either, because if you still have the same amount of investors, you still have the same demand, and therefore you don't have to pay a higher coupon or a higher yield to investors. So that's in summary it, lowering the hurdles for investors, that actually lowering the risk for the issuer and the involved banks.
Mm-hmm. So I can see why having the dual structure enables you to appeal to both the more traditionally minded investors and, of course, the ones who are comfortable buying assets in digital form. But does it create problems as well? I'm thinking here particularly if you've got a bond divided into these two parts and held in two separate CSDs, how can the issuer, the people most interested in knowing who owns the bonds, how can you maintain a single register of investors across two CSDs?
You're right. I mean, we didn't call it a problem; we called it a challenge. But it was for sure a challenge, right? We had to figure out how we define this in the prospectus and what tasks of the issuer will be. So in the end, two parts of the bond, they are two technically and legally separate bonds. They're summarized on the one prospectus, they have the same risk. It's basically economically the same thing, but still two separate bonds with two separate ISINs, which means we also have two separate registries, the two main registries at two central securities depository. But we have an exchangeability feature in place, which means you can transfer from one to the other. And we have a conversion agent role with one of the banks who are involved in the issuance to make sure that always an investor is able to switch from one to the other bank. So that's basically, we were looking at the 144A and Regulation S securities to have a similar structure in place.
So investors can switch between the digital and the traditional form of the bonds. They can switch from, if you like, from physical to digital and back again. You're not, the issues aren't the digital and the traditional portions of the bond aren't fixed in size. You can move between them. And is there an expectation that people will, well, a hope on your part that investors will gradually switch into the digital version?
Absolutely. I mean, we were very positively surprised that the digital part of it was actually twice as big as the traditional one. So there was 100 million Swiss francs in the digital part and 50 million in the traditional one. We expected it to be the other way around, to be honest. And we also expected that the investors who invested into the traditional part will slowly move over to the digital one as digital assets become more and more state of the art. We already had a big part of the issuance in the digital part, which is great. We saw, and that was also expected, first conversions from the digital to the traditional one. There are always investors who decide, who actually plan to have a buy and hold strategy, but then decide to sell it earlier. And for them, it was easier to actually sell the traditional part as long as the traditional market is still more liquid. But we expect that now, over the next years, the digital part will grow and the traditional part will become smaller. Absolutely.
So if I've understood you correctly, the division of the issue between the digital and the orthodox versions was entirely driven by the investors themselves. They made the choice when they subscribed. Now, am I correct at that, Stefan? Is that yes? Yeah,
absolutely. There was basically, it was communicated in the same way as a dual tranche bond, for example, a 5-year and a 10-year of the same issuer in parallel are communicated. So you give the investors the choice if they want digital or if they want traditional or if they want a bit of both of them. And they can decide where they want to invest. Obviously, it's up to the issuer in the end to do the final allocation. But as an investor, you have the choice and it's up to you to decide which one you want to buy. The risk is the same, the issuer is the same, the rating is the same. It's just purely the digital or the traditional format which differentiates.
Were you able to reach new types of investors by offering a digital version of the bond, or are all the people on the twin registers, as it were, very familiar to you?
That is something I do not have all the details on. As SDX, we are the infrastructure. Obviously, the issuer is part of our group, but I do not have all the details as our treasury department has. So I don't know if there were any new investors in. But from what I heard, there were mainly the institutional investors that are used to buy such assets in the traditional format that now decided to go digital. And most of them, as we hear, are still happy with it.
Now, bonds are never that liquid, but has making it available in two forms affected the liquidity of the issue adversely or positively?
I would say in the issuance itself, it didn't really make a difference. I mean, you have the same investors. Some of them go digital, some of them stay traditional. So the liquidity initially, that there was no difference. But obviously, fragmentation is always bad for liquidity, and that's not different here. So we have two markets. So you could have summarized the issuance under one ISIN and listed on one exchange, and probably you would have had the better liquidity there. Now you have two different bonds on two different markets, which means the liquidity on each of those markets is probably a bit lower. It obviously helps that there is an exchangeability feature. So that means that the two prices are in line, and the liquidity, if it's not there on one side, it's there on the other side. But still, we see that it's better for the market to come to one ISIN, and that's actually what we're working on together with the banks, together with the market participants, to allow one ISIN issuances eligible for both markets.
And are you looking to members of the exchanges to stimulate liquidity in the issue, by which I mean market makers, lead brokers, firms who agree to make prices or stand in when nobody else is a buyer or a seller?
Absolutely, absolutely. I mean, we are a stock exchange. We're a regulated stock exchange, so we are very happy to have liquidity providers on our platform. We currently have 3 banks onboarded. Those are major Swiss banks. There are also the banks which were involved in the first issuance, and all of them are providing prices from their trading desk. So we see liquidity, we see prices, we see quotes, we see volume on our market, and that's great because that's what exchanges are there for.
Mm-hmm. Just before I leave the subject of the types of investors you attracted, was it entirely institutional, or did you pick up interest from some retail investors as well?
I unfortunately do not have all the details. I'm not allowed to have all the details given I'm not in the treasury department. What I can say is typically such issuances are mostly with institutional investors, but retail investors are not excluded. So every retail investor can place an order with their desk at the house bank. The house bank, usually in Switzerland, collects the orders and then is also part of the allocation process. So I'm pretty sure there were retail investors investing into that issuance, also in the digital one, but I can't confirm.
Mm-hmm. Now, if I was an institutional investor holding, say, the digital version of the bond, could I lend that into the market for somebody to use as, say, collateral in the Swiss franc repo market?
Unfortunately not, no, but that's due to the requirement of the National Bank in Switzerland, not due to the digital format of the SDX bond. So both parts of the bond which has been issued, the original and the digital one, are not eligible for the repo basket of the Swiss National Bank. But that's due to other criteria.
Okay, but if it was a straightforward stock borrowing, there's the digital and or traditional version doesn't stand in the way of that security being lent, right?
That's what my understanding is. But in the end, that's the National Bank deciding. I
wasn't thinking so much of the National Bank, just of a commercial bank that might want to borrow the bond to collateralize some credit they've obtained. They can use these without operational difficulty, whether it's digital or
I mean, the bond in the end is a bond. It's existing on the distributed ledger technology, the digital part of it, and so therefore it's not different to a traditional bond. Uh-huh. Where we have a slight difference is that on the stock exchange, the new regulated digital stock exchange, we trade with atomic swap, which means as soon as you trade, you also settle. And therefore, it is not possible to actually borrow or lend between trade date and settlement date as you do today. So whatever you trade on the exchange, you have to have before you trade. So there's no borrowing or lending involved there. But apart from that, if you're trading OTC, if you find borrowing or lending opportunities, there's nothing which would speak against it.
And talking of trading, how does that work? I assume that the Swiss exchange isn't open round the clock, but SDX is open round the clock. So have you got the digital bonds trading 24/7 and the traditional bonds just trading in a normal trading day?
No, we are not open 24/7. No, that's we try to be as efficient as possible. So we don't want our operation staff to work 24/7. That would not be fair. No, we also have opening hours as a regulated stock exchange during working hours, Monday to Friday. So that didn't change. Obviously, if you want to trade the bond OTC, but that's the same for traditional assets, you're free to do so whenever you want. If you want to trade on the exchange, it's during business hours, same as for the settlement of the transaction.
I noticed the issue was actually oversubscribed when it was launched. Was there a kind of excitement around the fact that this was a first, and the bonds were being available in digital as well as conventional form? And as you said, to your surprise, the digital bond proved more popular than the conventional. So did that oversubscription reflect something of the novelty value here, or were other considerations like the coupon more important?
There was for sure an excitement about it, and there was also a lot of questions, and it raised more interest for investors to know more. So that, I'm pretty sure, that also helped placing the security because of the novelty, because everyone knew about it. But in the end, I think it was more important for the investors that actually the risk of the bond is acceptable, that the yield is acceptable, the pricing is fine. I think that's probably what drove the demand more than just the fact that it's digital. But it helped. I'm pretty sure it helped.
And was there interest from abroad, or were the investors all domestic, Swiss domestic investors?
They were Swiss domestic because there are sales restrictions on the bond itself, which exclude, for example, US American investors. So again, I do not see the real distribution or the real allocation, but it should be primarily, if not fully, Swiss domestic investors.
Can I ask you a technical question? You've touched on settlement already, but how is settlement going to work in the case of the digital bonds? You can't at this time have Swiss francs on a ledger. In other words, the settlement of the transactions must take place with some kind of payment token or stablecoin. How do you get cash onto the ledger to settle these transactions in digital bonds?
Well, very good question. Very good question. And that's something we thought about long and hard, because within the SDX ecosystem, we only work with tokenized assets and only work with tokenized cash. So we can't work with fiat Swiss francs. So all the participants of the ecosystem, which means us as SDX, as the infrastructure provider, and our clients who have a node in our ecosystem, in our network, we have to work with tokenized Swiss francs. That means that the banks send fiat Swiss francs to SDX, to the account we have at the Swiss National Bank, and we then make sure that we issue tokenized Swiss franc for exactly the same amount. So it is comparable to a stablecoin, but it's always 100% backed by fiat money, which is on our account at the National Bank. So it's not central bank digital currency, not yet, I want to say, but it's not for us to bring central bank digital currency. It is a form of a stable coin, of a digitalized Swiss franc.
Well, I'll ask you about central bank digital currency in a second, but just to be clear on this point, the traditional bonds can settle in central bank money, but the digital bonds can't at this point. They both settle in, yeah, okay.
Exactly. The traditional bond settles with fiat normal Swiss francs. The digital one settles in tokenized Swiss francs, but then again, it's only within our ecosystem. So the issuer in the end will receive fiat Swiss francs. They will not receive digitized or tokenized Swiss franc. Same for the investors, because they're not direct participants of SDX. They will also pay fiat Swiss francs to their banks. The banks then make sure that within our ecosystem, tokenized Swiss francs are exchanged, and then the money leaves the SDX system again, and then the issuer will receive real Swiss francs, so to say.
Now, you touched a moment ago on central bank digital currencies, CBDCs. SDX has been involved in two settlement projects using CBDCs. There's the domestic one with the Swiss National Bank, Project Jura, I think it was called, and then there's a cross-border one, again with the Swiss National Bank, but also involving the French Central Bank this time. As you look forward to a time when central bank money is available on ledger, as it were, how do you expect what you've learned from those two projects to be applied to making the settlement process more efficient, both domestically and across the Swiss border?
Those projects were very important to us for sure, and I assume also for all the other parties which were involved, especially the national banks. That is the proof that technically everything is working already. So we did those transactions on our test system, so which means with the technology we have, and it worked. So it is really a question of is that enough reason for the national banks to decide to go towards wholesale central bank digital currency? Technically, there should be nothing speaking against it, but of course there are other reasons, and only the national banks themselves can judge when the right time will be to introduce central bank digital currency. Of course, for digital assets and especially for SDX, that will be a game changer in a positive way, as the banks will then be able to actually use tokenized cash directly with the national bank and not having a counterparty risk with SIX. Some of the banks are happy. It's a good workaround. It works. It works today already, but that would improve the situation. Absolutely.
Now, you mentioned earlier that you were looking forward to a time when you could start to digitize the issuance process itself in terms of how the documentation is prepared and how it's distributed to underwriters and investors. I'm not sure how coherent this question is, given the bond is available in both forms, but because you can digitize parts of the traditional bond process as well, of course, as well as the digital bond. But if I said to you, if you look across the whole bond life cycle, the issuance, the listing, the trading, in time, the servicing, the paying of the coupons on the bonds, and so on, how is that? How much of that has been or will be digitized?
Very good question, because there are several approaches on how to leverage DLT or blockchain when it comes to the whole life cycle of assets, especially bonds. What we did is we digitized the bond itself, and therefore the processes around it are impacted, or it facilitates also digitizing those processes. With digitizing the bond itself means we are already allowed in Switzerland to work with dematerialized securities, and therefore we can include those dematerialized securities into our ecosystem, and they are actually created on the network. They're created on the distributed ledger technology, which is our main registry. That's compared to traditional central securities depositories, where it's really a central system where those securities are created and then also serviced. And that means that every interaction with the bond, be it a trade, be it a coupon payment, be it a redemption, they're always interacting with the distributed ledger technology. And that means that those processes can be improved. Some of them will be improved in the future. Some of them we already improved, which is the trading, for example, where the trading engine, the exchange, interacts with the distributed ledger technology. Today, they're mostly separated. You trade, and then you have 2 days to settle, and that's settled somewhere else. Now, if you trade on the stock exchange, on SDX, the stock exchange starts speaking to the central securities depository, to the distributed ledger technology, to make sure that the assets and the cash are there, exchanges automatically and settles it automatically. So that's one part where we see that because of the reason that the asset itself is digitized, that the processes around it can be digitized easier as well.
Now, just on the narrow question of the servicing, which means in this case, basically the paying of the coupons and eventually, I suppose, the paying of the redemption proceeds. If you've got the bond available in digital form, in theory, you could just have a smart contract written into that bond, which would pay the coupons automatically, presumably through the banking system. Then you've got the traditional form available, where presumably you'd have to have a paying agent who would look at the register and see who owns what, and then calculate the right amount to send to them and send them a payment again through the banking system. In other words, is that asset servicing, that payment of coupons, complicated by the fact the bond is available in two forms?
It is, I would say, for the paying agent, which is chosen to be the same one for both parts. It is a bit more complicated.
You're not using smart contracts then?
We're not yet using smart contracts. Yes, right. We automated the process, but we still need the paying agent. We still need the issuer to actually tell us who the paying agent is, and therefore who is allowed to do payments on that bond in our ecosystem. And that's comparable to how it works in the traditional world. Obviously, we give tools and we try to automate wherever possible that the paying agent doesn't have to do as many things manually. And ultimately, we can think of the paying agent just defining everything in the prospectus, and then it will be done automatically. That's what we're working on. That's where the technology helps us to get there. But today, it is comparable. You have the paying agent collecting the payments, collecting the money for the coupon payments at the issuer, and then feeding it into both central securities depository, depending on how the distribution is between the digital and traditional part. And then from there on, it's trickled down to the end investor. So on, doesn't matter which part you own, be it the traditional or digital one, you get your coupon payment in Swiss francs, but it will be split at the source depending on how big the digital and traditional parts are.
Mm-hmm. Would you expect to be using smart contracts in the future?
Absolutely, absolutely. I mean, it's so far we're running a new technology, but the processes are comparable, and that's also wished to be this way because we need to start where the industry is today. We need to start with the interfaces that are there today. We need to start with the processes that are there today because we want to take the whole market with us on that journey. Mm-hmm. If we would come directly with smart contracts, we'd probably lose the clients before they even connect to us. And that's why we chose it this way. But absolutely, smart contracts is the way to go. And we will define together with the market, together with our clients, where we shall apply them first and in which priority will then automate the other interactions the clients have with us.
And as you say, you had to bring the market with you. The issuer chose the paying agent. You had to bring the paying agent with you, but you also had to bring with you the investment banks, which the group as issuer wanted to work with. You worked, I understand, on this issue with Credit Suisse, with Zurich Cantonal Bank, and with UBS. Bringing them along, what was different about what they had to do, or was it a very familiar process to them?
The process itself was very familiar, but we needed to onboard them first onto SDX. So they needed to become a member of a new stock exchange, a member of a new central securities depository, and also get familiar with some of the slight differences we have. I mean, we tried to be as similar as possible to the traditional world, not to actually cost too much efforts on their side. But there are some specialties because we run new technology, and thankfully the banks adapted to them, and they also thought it's a good way forward. So it took them some time to actually get familiar with our system. What we in fact needed is at least one of them to be part of the SDX ecosystem, to be in the role of an issuer agent and also the paying agent. So the issuer itself is not part of our ecosystem. We need the bank to actually bring that asset into the SDX ecosystem, to issue it on the distributed ledger technology, and then distribute it to the other members of the ecosystem. And that's what one of the three banks did. All of the three banks are onboarded. All of them are active on the stock exchange, and therefore all of them are also active in tokenizing and detokenizing Swiss francs to be able to make sure that the trades actually settle on our market.
Now, you will, of course, have had to bring parts of your own organization along with you because you've got a separate exchange and separate CSD. And I was wondering if FINMA's given this license to SDX to operate an exchange and to operate as a CSD. Now, how different are those licenses from the ones which SIX Swiss Exchange and SIX SIS already held? I mean, and I'm asking this question mainly because I'm wondering how important regulatory certainty or uncertainty was, both to the group as an issuer, but also more importantly, perhaps to the investors in both the digital and the traditional form of the bonds. So
that's again a very good question, very important one as well, because that was actually the first discussion we had at SDX to decide if we shall go to the regulated way or not. In the end, it's the same quality. So the licenses are exactly the same. It's a stock exchange license, where there are only 3 of them. currently in Switzerland, and it's a central securities depository license. There are only 2 of them, and the other one is with our mother house, as you rightfully said, with SIS. So also for FINMA, they don't issue such licenses on a yearly basis. They do it every couple of decades. So it was important to go on the journey also with FINMA to find out what changes, because we have a different technology. But in the end, we have the same requirements when it comes to stability, when it comes to reliability. So it's the same quality of license, so we also have the same requirements. That is very important, because that regulatory wrapper around SDX actually makes us a trustworthy infrastructure. And because we are a trustworthy infrastructure, because we are regulated, that means that investors, due to their investment guidelines, are allowed to invest in assets that are on our infrastructure, which then makes digital assets for the first time mainstream. We saw a lot of very good projects. We saw a lot of digital bonds being issued in the market, but there were also, unfortunately, all very fragmented pilot projects. Were usually not mainstream, where usually institutional investors weren't allowed to invest into those bonds. Now, with that regulatory wrapper, we make it mainstream. And so there's actually, apart from that, it's something new. There's nothing that speaks against investing into digital assets coming over SDX.
Just so anyone and listening is absolutely clear on this point, that the status of tokens or tokenized assets under Swiss law, as opposed to judgments by the regulators, is it absolutely clear now? Is Swiss law clear about the treatment and status of tokens and tokenized assets?
The way we are working with, absolutely. The tokens on SDX are dematerialized and intermediated securities, and that's covered by the Swiss law. That was already covered because the DLT law, before the DLT law came into effect. So for us, we have asset tokens, and the asset tokens are dematerialized intermediate securities, and that's nothing new for the investors, and therefore the legal status, that's all clear when it comes to SDX.
Now, can I just ask about the technology choice you made? You worked with R3, who are the leading provider, I suppose, of enterprise blockchain or of these private permissioned networks. Is that what explains your choice of R3, that private permission network? Obviously, the group works with lots of different technology vendors, but what was attractive to you about working with R3, with Corda?
Absolutely, you're 100% right, Dominic. That was the basis for the first decision SDX did was, where shall we go? And if you go the regulated path, you're very likely to actually have a permission network running, because that's the way you can control it, and that's also very similar to the way clients are used to work with central securities depositories. And there's also the ecologic sustainable aspect to it, because in a sustainable network, due to the consensus mechanism, it's not as energy intensive as an open network would be. So there are different reasons out there why we chose to go to a permission network, and R3 has proven that they are fit for institutional use. So that those were exactly the right reasons why we decided to go for R3.
I've got some forward-looking thoughts about this. Is obviously the first of a number of issues which you would like to happen. Bonds have emerged as suitable for tokenization, a use case which is growing in popularity around the world. What does make fixed income instruments more attractive and easier to tokenize than, say, equities?
Very good question. For me, it's easier because I know bonds and I don't know shares. To be honest, one thing clearly is that bonds as an instrument, of course, they can be very complex if you look at certain types of bonds, but you also can have very straightforward bonds, bullet bonds, where you don't have changing coupons, where everything is defined in a couple of pages on the prospectus. And that's probably the best way to start, because you're bringing new technology, and that should be the main focus of the investors, that it's something new in technology. There should be no questions around the asset itself. And that's why we started also with bonds and with plain vanilla bonds. Equities, we also have an equity offering. It is possible to tokenize shares. We're ready for that. We have the license for it. Obviously, there's a bit more complexity if you have the global share registry behind it, which needs to be updated. So there's more complexity which comes with shares. Doesn't mean that there are no complex bonds out there, but it's not where we start. We start with plain vanilla because we think that helps the investors, that helps the market participants to actually get familiar with digital assets.
So you've done fixed income, you're looking at equity. Are you looking at other asset classes? I'm thinking here of real estate, commodities, privately managed assets in equity and debt form, but maybe private equity, private debt funds, maybe even funds, generally, mutual funds even. Are these asset classes you're looking at as well?
Absolutely. We currently have the license for equities and bonds. And we are in discussions, or always were in discussions also with providers or market participants of other assets. Naturally, everything which is already today possible to deposit at the CSD and trade on the exchange is nearer, and it's probably easier also to tokenize. But we don't want to stop there, especially art, for example, especially real estate. That's very much of interest. And also NFTs, that's something we're discussing. On crypto, something we're discussing. Doesn't mean we're yet there. And it doesn't make sense for us to start with something that the market doesn't want. So if we started, we need to make sure that we have the market participants ready, that we all agree on the right way forward, that we actually can start with volume and help the market to evolve that way. So yes, we are absolutely discussing various other asset classes, potential asset classes in the future, which might not be bankable today, but it's not yet defined what will come next.
You've raised ESG issues, if I might use that blanket term, at a number of points in this conversation. Now, the question of green bonds is often brought up. Are green bonds particularly well suited to being digitized or tokenized? Is this a market you're looking at?
Yes. Green bonds or ESG bonds in general, very dear to my heart. As an infrastructure provider, we always think about where we can add value, because it is such a huge market at the moment with many players, and all have their role, and it makes sense to have their roles, actually specialized roles distributed over the value chain. Where we think that especially technology can help is when it comes to reporting for the issuers. We might think of in the future, for example, allowing data tokens tracking CO2 output, for example, of a green bond, data tokens to be included into the asset code, into the asset token, so that actually the asset will track the development of the investments of the company which was funded through that bond. And if you think it further, we could even say we build in a smart contract which then will raise or lower the interest rate or the coupon of the bond depending on the CO2 output. So there are a lot of possibilities out there, reporting wise, but also when it comes to smart contracts, which would help the green bond or the ESG bond market.
Mm-hmm. You're also looking at international expansion. As I understand, SDX is working with SBI Digital Asset in Singapore to create an exchange for tokenized or digital assets in Singapore, and it'll open later this year. How is that relationship going to work? Are you, I don't know, supplying technology or expertise? And what's the synergies with what you're doing in Zurich?
Very good question. Very good question. We see a lot of interest from Asia, and that's why we decided to actually have that joint venture. And we are positive. There are a lot of discussions on what part of the technology can be used, if we can connect the clients, the investors on both sides, where we actually can cooperate, that it makes it easier for the whole market to tap Swiss and Asian digital securities. We see that potential. but unfortunately, it's too early to talk about details today. Unfortunately, but there will be press releases. There will be more details coming up.
Well, one reason I asked you that question, it seems to me that Singapore could be quite a crowded market to operate a token exchange in. You've got ADX operating there already. You've got DBS who are exploring the idea as well. Clearly, you see Asia as likely to take off quite quickly in terms of hosting tokenized issues and investors. Is that the high level logic here? It doesn't matter how crowded the market is, there'll be lots of business to be done.
That's it, right? And the market, absolutely, I agree. The market looks crowded, but in the end, there's also various ways how you can approach digital assets. You can approach them via processes. When it comes to the distribution, you can approach it by digitizing the securities. You can approach it more from a crypto angle. So I think it is crowded, but still, I think there's place for various specialists, various specialized platforms, and potentially even for collaborations. So I'm positive that with the background we have from a more regulated, from a more securities-oriented market or platform, we can contribute a lot to that joint venture.
One last question for you, Stefan, slightly off the wall question. Yeah, there are lots of people out there, lots of institutions out there who hold cryptocurrencies, and I'm sure they would be very interested if issuers like your own group started issuing bonds denominated in cryptocurrency. But do you think it makes sense for issuers to even consider issuing a bond denominated in a cryptocurrency?
This is a very interesting idea, I have to admit, and it would naturally be a fit for SDX and our services, given we're in the digital space and given we're also building services in the crypto market. I have not yet seen clear interest of potential issuers, but it's an interesting thought, and it might not yet be the right way probably for traditional issuers calculating in Swiss francs and euros or US dollars, because that might from a balance sheet perspective a bit be
a strange
challenging. Right?
Yes.
But there are lots of companies out there who are thinking forward to actually dedicate themselves to cryptos. There's also countries currently promoting, especially Bitcoin. So why not? I mean, I'll be more than happy to actually analyze this group with the potential issuer and see where we can go.
Mm-hmm. And when you've done some thinking, I look forward to talking to you again about it. But for now, Stefan Bosshard, thanks very much for taking time to talk to us.
Thank you very much.